Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. On the 1 hour chart we do see a divergence in the 1 hour MACD. As indicated on Wednesday, we start to head lower on the 4 hour chart. We start to see a divergence as well on the 4 hour MACD, and as long as we maintain above the 9 moving average and 18 moving average on the 4 hour chart. But on the daily chart, let's expand out. We do see a positive for the bulls as the MACD is indicating towards a positive chance as we were able to converge last week and we continue to move on higher. And ideally, if you want this uptrend to stay intact, we need to close above the 200-day moving average, which is the green line. If we do manage to close above it, that is a clear signal that this downtrend may be in reversal. And we also have the 9-day moving average converge onto the 18-day moving average. Again, we need to see a clear indication of several days above the 200-day moving average, as well as the 9 moving average converge onto the 200 moving average. Some concern, or for the bear argument, is we still have a gap unfilled here that dated back to August 8th, and between August 9th we have this gap. Eventually it needs to be filled, not all the time, but for the uptrend to completely reverse, it'll be nice to have this gap filled. So let's head to the forecast model. On here I'll go day by day, where WTI crude oil or USO will head to the next coming days. We have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecasts we should focus on? So ideally we want the trend that looks identical to the current trend. So we have the current trend right here, and I believe this trend right down here is the best match, and this trend dates back to January 19, 2012 to April 16, 2012. I'll point out why these two charts are similar. So what we have here in the beginning of the trend, we were touching the bottom Bollinger Band, and then we proceeded to move on higher to touch the upper Bollinger Band right there, and we see an attempt to touch the upper Bollinger Band at this instance, but not quite, but is indicated as a peak. And then we proceeded to move down lower right here, touching the bottom Bollinger Band. We have another peak or a touch on the middle Bollinger Band, and we also see another attempt to close above the middle Bollinger Band right at the end here. In between those we have a touch on the bottom Bollinger Band right below it as well. So we have these trends. Oh, I forgot, in between those we had a touch right there on the bottom Bollinger Band. So we have that instance as well. So let's mark the trend in question. So we have a touch on the bottom Bollinger Band, and then a quick reversal to touch the upper Bollinger Band right there. And as indicated in the previous trend or current trend, we see another peak, but not quite touching the upper Bollinger Band. After that, we see it touch the bottom Bollinger Band right there, and after that we see it touch the middle Bollinger Band, or a reversion to the mean at this instance. So let's just mark all the candlesticks touching the middle Bollinger Band, one towards the end, and in between those two we see a touch on the bottom Bollinger Band right there. So we have about 1, 2, 3, 4, 5, 6, 7 points. We also have 1, 2, 3, 4, 5, 6, 7 points as well. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So again, the trend we took a look at was January 19, 2012 to April 16, 2012, and it looks like WTI crude oil was only up around 55 basis points. So most likely sideways price action. And that is it. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.